Hey everyone, I wanted to introduce you to my morning oil strategy that I have been using now for quite some time. And this particular strategy has really changed my trading game around. It's a very simple strategy, but super effective. I've only tested it in oil, so it might work in other markets like the ES or the NQ, but again, I have not tested those specifically for oil. This sucker works. I have back tested the crap out of this strategy, and I know you guys are going to enjoy it. And there's simple rules that you got to follow to get these going. So after the intro, let's describe the strategy. All right, everyone. As always, nothing that I say during this video is financial advice. I am here to simply learn and train and grow this trading community and this channel. Hopefully, we can help each other become better traders. The struggle to become a good trader is very difficult. The road to success is not an easy one. Again, they always say nothing good comes easy. I know the phrase kind of sucks, but it's the truth. We have all. I assume that since you're watching this video, you have probably been looking at trading videos, just like how I have. I spent the first 2 years of my trading career pretty much looking at YouTube videos. I mean, morning to night. It like almost consumed me because I was looking for something that worked, and I got into, everything. I was looking at candlestick patterns. I was looking at support and resistance strategies, supply and demand. I was looking for smart money concepts. It was just endless. I followed all of the popular gurus that are on YouTube, and I think that I think that you have to go through that to finally get to something that works. And I know it sounds cliche. I know you probably don't want to hear that, but there is a huge learning curve in trading. And eventually you might stumble onto a video that you're like, hey, you know what? I can maybe implement that into my trading strategy every morning or every day, and I could somehow make it my own, which is pretty similar to what I am going to be explaining with what my oil trade is for me. So, as you know, I've documented on this channel, my trading for the first 2 years sucked. I was losing money, but at the same time, I was so in love with these charts. I was in love with, trying to figure this game out. And I knew that I wasn't going to be able to beat it, but I just wanted to be a participant in it and be able to profit, even if it was a small amount of profit every day or weekly or monthly. I knew that I was going to be happy. And finally, something in the last 6 to 7 months really finally clicked. And I can tell you pretty much it's very simple. I became more of a time-based technical trader that is looking for a particular setup at a particular time. It completely eliminates over trading, revenge trading. You follow your simple rules. I have 4 trades that I take every day. 4 trades that I take every day that are time-based trades. Okay? I take 2 in oil, which I'm going to be showing you here today. I take 1 in natural gas, which is fantastic. I'll be sharing you guys that strategy next week. And then I take a NASDAQ trade, typically 5 minutes right after the open. That's it. So I don't have to worry about over trading anymore. And guess what? I have honed in on these strategies. I back test the shit out of them. And another thing you need to do is you need to back test this stuff every 30 days. Because what I'm teaching you here today for my strategy, you could go back 3 months and it's going to show you that it works. But at the same time, oil changes. The market in oil changes. And the market for oil has been ripping. I mean, it's been absolutely ripping. So, and that might change. You can have a period of time where oil, starts to slow down. And the targets that we're going to be talking about might need to be narrowed down. So you constantly have to back test a strategy. Don't just rely on what somebody's telling you on YouTube, because I know I've done that. And now I'm doing kind of the same thing. I'm putting a video out there with my strategy, and it's a strategy that I know that works right now, and it's a strategy that I've been trading for at least 4 months, and I know that works because I see my P&L. So let's dive into this strategy. The rules I've got up here, they're pretty simple. We're gonna take a maximum of 2 trades per day. Sometimes I take one trade. Some days the setup doesn't appear at all. Very rare does that happen, that no setup shows up. First session is from 8 a.m. to 9 a.m. Central Time. Okay, please understand I am in Central Time. So adjust your time for your time zone, or else you're going to have mixed results or results that I haven't back tested. Okay, 8 to 9 is the first session, which is in gray right here. Second session is from 9 a.m. to 10 a.m. Central Time. Okay, that's my second one. I am looking for one trade, only one trade per session. Okay, and I've got 2 indicators up on TradingView. You don't need the indicators. You could do this without it. It's actually very simple to do it without it. And you could do this on any trading platform. I'm a futures trader. I really love NinjaTrader. That's the platform I use. So I could trade this on NinjaTrader with no indicators. I just like the way that this looks. It makes it super easy for me to identify setups and to identify my time zones that I am so keen on right now with this strategy. So first I'll just go over the indicators that I have on my screen. First one is a session indicator. Super easy. I'm sure you can actually probably use any session that you could find on here. I just use sessions on chart by ArrowRocks _ AIF. That's the one that I use. That's the one that you're looking at. Again, set it for your time zone correctly. So it's super easy. And then I have one other indicator, which is inside bar. And you just type in here, inside bar. And it's the first one by CMA. Okay? So add those 2 indicators to your chart and you're pretty much done. The one thing that I like to do is I will go into the settings of inside bar and I take away these shapes. Okay, I don't need the arrows. I'm not using any type of strategy that's based on these arrows. All I need is the green and red colored candles, okay, which is going to signify an inside bar. Now, people, don't just think, oh, this guy's just got an inside bar strategy. Well, yeah, you know what? It kind of is just an inside bar strategy. It's pretty damn simple, but guess what? It freaking works. So just listen to me. Back test it. Go into TradingView. Go into your charting program and back test this thing for yourself. And you tell me if this thing isn't profitable or not. Okay? That's how strongly I feel about this one. So again, maximum 2 trades per day, 1 per session. First session is from 8 to 9 a.m. Second one is from 9 a.m. to 10 a.m. Central Time. Here's an important rule. Ignore an inside bar. So just so we all can understand what an inside bar is. An inside bar is a candlestick that is being engulfed by the candlestick right next to it. Okay, so it fits within the body and the wick of the candle right in front of it. Okay, and the indicator is gonna color every single inside bar that it finds. Okay, so if this closed higher, it's a green inside bar. If it closed lower, it's a red inside bar. But the red and green doesn't even matter. All that matters is that you know that this is the inside bar that this strategy is looking for. If in the morning, okay, at 8 a.m. or wherever your time zone is at, if the first candlestick right here is an inside bar, so if this one's colored, don't take the trade. Okay, so just wait. Wait for the next one. We're only going to take one during this period. So this is today. This is the chart for today, 10:20. This is the chart that I took to trade. And so we know if this is an inside bar, let's just say it's 7:55, we definitely are not taking that one because that's not even in our session. But this first one is also invalidated because it's the first in the session. And I'm going to teach you why, because I'm using the candle in front of it as what I can call my source candle. Okay, super important for what our stop loss and take profit is going to look like. So what else do we have here? Stop loss. So our stops, which I'm super keen on, is it's a set 1-to-1 risk to reward strategy. Okay, and it's very simple. Let's just say that you've got a setup. So this is within our session timing. Okay, and we have an inside candle right here that has formed. Okay, now what we're looking for is we're looking for a break of the high or the low of this inside bar. Okay, sounds simple enough. You might have seen this strategy somewhere else. It's an inside bar breakout strategy. It's different. I'm telling you, look at this thing and just watch this thing in oil, and you're gonna be like, wow, this is insanity. So what you're gonna do? How do we find what our stop loss is? Okay, that's why the previous 5-minute candle. Sorry, we are in a 5-minute time frame. The previous 5-minute candle is going to become our source candle. Okay, so we see that the next candle after the inside candle pierces the high. So that would technically get us into a trade. Because what I do is I set a trade at the high of the candle, and I set a trade to short at the low of the candle. Okay, so go long at the top of the candle, go short. Just set those trades. I mean, you could do it in TradingView, you could do it in Ninja, TradeStation, wherever you want. Put 2 limit orders or whatever type of orders you want, market orders you want to put in at the top and the bottom of your inside candle. That's all you got to do for right now. Once the price action pierces either the high or the low, you are now into the trade. And what you are going to do is you're going to set your stop loss to the bottom of the source candle. This bottom, the wick at the bottom, becomes your stop loss. Okay? Your risk, which is going to be from your entry up here to the risk down here, whatever points this is, that is what your take profit is going to be as well. So let's look at this a little bit more simpler with a tool that TradingView can do for, in this case, we know that this would have activated to the long, okay? And we would have gotten into this trade right at the top of this candlestick, right there. I'm going to adjust my stop loss to the bottom of this candle right here, okay? So we understand that. It's the bottom of the candle right next to it is my stop loss, okay? And you are going to then, so we've got a stop loss here of 20 points. So what is my target? If my target is 1-to-1, my target now is going to be 20 points, okay? And guess what? The trade was profitable. We got our 20 points right here, okay? Super simple, right? Now, we have a great example of a trade that you can't take. And I'm going to tell you exactly why right now. We need the next candle. So this would be in session 2. I would only take one trade in session 1, which was profitable for 20 points in oil. Okay, so that would be $200 on a full contract. That's $20 on a micro contract. You could do the math on however contracts you want to do. Reason why I would not take this setup here is that the trade would then have to be activated outside of our session, because I would have to wait for the break of the high or the low of this inside bar. Puts it outside of my 10 a.m. window, no trade. Okay, so today I only took one oil trade, and I hit this one for 20 points this morning. Very simple. So now what I'm going to do is I am not going to cherry pick anything. We are just going to go day by day for, let's just call it 5 or 6 days, and then I am going to leave this on you to back test this if you want to back test this for a month, however long you want to go back into oil, and you let me know if the strategy is profitable. And you let me know if you start trading this strategy and you start making some money. Okay? One other rule. And this is a big one. No pun intended, because it's for the big candles. If your source candle, hopefully we know now what the source candle is. Source candle is our candle that we're going to be using that is always going to be left of the inside candle, the inside candlestick. If this source candle, if the risk is too big, meaning that if it's anything over 40 points, I want you to set your max stop loss at 30 points. I want you to set your target, obviously, to 30 points because we're 1-to-1. So again, on these really big, so you might get these news events, strategies, and you can get this huge source candle. And, you know, I've just through my back testing, I have found that anything over 40, now if it's 36 or if it's 35, I just go 1-to-1 on the 35 or the 36. My rule is anything over 40, I bring down my stop loss to a maximum of 30 points. My take profit is 30 points. Simple enough. And the last rule, which this rule, I'll leave it up to you. I will leave you this on this next rule because there are crude oil inventory days. Okay, you Google it, you're gonna get a calendar of when those days come out. Okay, I typically do not trade this strategy on those days. I'll put an asterisk on that. Through my back testing, they're still profitable over the long term. The reason why I don't like to trade them is that there's so much activity and there's so much whipsawing going on that you get these huge source candles. Again, you get some great moves, you get some great days, but in general, if you want to avoid those days, you know, it's probably just good risk management. But even if you take this every single day, both of these trades, you could even say, you know what, Rob, I'm just going to take them both because I like the strategy. I back tested it and it works. And I think that the first oil day, which is on the 18th that came out inventory, the trade does lose. So I am letting you know that. But if you keep going, I think I marked the other 2 days, those trades worked great. So, I mean, it's just, you know, if you want to trade them, you can. If you don't, you know, that I don't. So that's just what I'm saying. Those are the rules. Pretty simple. Okay, you guys know the indicators, how to get this on your chart. Remember, it's a 5-minute chart. We're trading oil. Okay, so let's jump then to the next day here. And again, that's why I like these kind of sessions. I like these sessions because you just jump right to it in the morning. It just opens right up. It starts charting. And I know when I'm looking for trades, okay? So what do we see here? In the morning, this is the 19th, so this was yesterday, as of this video. We see that at the morning session had no trades, had no inside bars, okay? We do see a trade that formed here in the second hour, which is from 9 to 10. Perfectly fits in all of our rules. And we now know that once we see this inside candle, I am putting an order to go long at the top of this candle, and I am putting an order to short at the bottom of this candle. We obviously see that price action pierces the going to the upside. So we're going to go long in this trade. So let me grab my long position tool. We would get into the trade right there. We know that we are going to use our stop loss of the bar, the source bar, which is the one candle left of the inside bar. We're going to take that to the bottom here since we're going long. We have a stop of 23 points. So my take profit is 23 points. We come this down and we've got another profitable trade. Okay, 23 points. Now, I am 1-to-1 risk versus reward. Okay, I have back tested 1 to 1.5, 1 to 2. The results are not as good. They're not as good as the 1-to-1. Okay, so sometimes you get awesome on the 1-to-2s and the 1.5. You get some great moves, but back tested, it doesn't make the same amount of money. It doesn't make the same amount of points. So keep it to the 1-to-1, and you'll see why. You'll see why once we test. So I think we understood why, the rules here on how we got in. Okay. Our next day, which I believe was Crude Oil Inventory Day. Okay. Personally, I don't trade this on this day, but let's just see what would have happened. Okay. I like to see, I want to show you the winners, the losers. I want to show you everything. I want to be 100% transparent in what my strategy looks like, so you guys can feel the same thing. So here, what are we looking at? So we've got an inside bar that forms at 8:45, so it fits well for our first session trade. And what we would do is we would set our order at the top of this candle for a long, and we would set up an order for a short at the bottom of this candle. And we can see that the next candle pierces the bottom. Okay, so we would be in a trade on the short side. I think we all can understand that. So let me bring my tool where we would get into this trade, which would be right here. What's our stop loss? Very simple. This is our source candle right here. We're going to go to the high of that source candle, and we are looking for a trade of 23 points of profit. We take the target to 23 points, and we hit take profit. We actually take profit in about, you're probably in that trade about 10 minutes. Next trade is a inside bar. Okay, and you can automatically see that this wicked up and it wicked down. This is a losing trade. Right here, you lost. Okay, so this secondary trade, which you never would take a secondary trade, would also have lost because this pierces down and then reverses right back up. I think maybe eventually, depending here, this one might have worked. Let's just map it just for the heck of it. Even though I would not have taken that trade, but let's just map it to see what would have happened. Oh, this is a good example. Almost a good example. 39 points is the max stop loss that here. So you're getting to the point of like a really big source candle. You can see this. There was a huge wick up and down. But let's just say, you're looking for. Well, this is definitely a loss. I mean, you just keep going, and that's a loss. So I would never have gotten to this trade because this would have been the second trade in a session. This right here would have been my second trade. And this trade here definitely would have lost because you can see it goes up higher than the source candle. So again, I wouldn't be trading this day. So let's move on to our next day after that, which I think would be, it goes down to the 17th of October. Morning session comes in, got no trade. Okay, now we see a bunch of inside candles, but we're not worried about these over here. We're worried about the first one that we see. That's all I care about, okay? And what are we going to do? We're going to set an order to go long at the top of the candle. We're going to set up an order to go short at the bottom of this candle, okay? And as you can see, we would have been activated on a long trade, okay? So we would be taking a long here. Let's grab our long tool. This is our entry. Our stop loss is the bottom of this source candle right here. We're looking for 29 points in oil. Do we get 29 points? We sure do. We get 29 points right there. One trade, that's it. Okay? For morning session did not set up, so nothing we can do about that. But I'm happy with my 29 bucks. One full contract's 290 bucks. Micro's 29 bucks. You can do the math. What do we got brewing here? Okay, so we got the morning session. We've got a trade here that, again, we would put a long order at the top of the inside bar, and we'll put a short at the bottom of the inside bar. And guess what? We've got a trade that now shoots to the bottom. So this would have activated a short. Let's get our short tool, and here we go. What is our stop loss? I'm sorry, our short would have been here because we actually have two inside candles. And we have, this is our source, that's 56 points. Now, does the trade get you 56 points? It sure does. Okay, so if you don't want to follow the rules, you would have gotten 56 points on this trade, which is awesome. But that's not what my rules state. My rules, I would bring this risk down to 35 points, and my take profit would be 35 points, which it hits with no problem. Okay, and boom, you're in profit, 35 points. Pretty easy one. Our second one, we've got another activation in our second session here from 9 to 10. So again, I'm just gonna keep going over the rules. You put an order to go long at the top of your inside candle, and you put an order to go short at the bottom of your candle. We obviously get activated to the upside. Let's put our long tool right here where our order would have been activated. What is our take profit and our stop loss? Well, we moved one to the left, which is our source candle, and we put this to the bottom of that wick, which is 37 points. And do we get 37 points? Well, guess what? We sure do. We get 37 points on that trade as well. Now, none of these trades are cherry-picked. These trades are one after the other after the other, okay? And let's just go one more day because I know this video is going to start getting kind of long. Here's a good example of where we wouldn't take a trade. So this is an inside bar, but it happens at 7:55 in the morning before our strategy starts. Even if this first huge candle would have been an inside candle, which it wasn't, but if it was, I still wouldn't have taken this trade because remember, we ignore the first one. So it looks like we're only taking a trade here on in the second session, and we get this set up very nicely. So we were taking a long trade at the top of this inside candle right here. We're taking a short at the bottom of this candle. So we're waiting with those two orders just pending, and trying to see which one of those orders is going to be activated first. Obviously, if it goes long, the short gets canceled, or you have to cancel the short because you're not going to take both of those trades. It's one or the other, whichever one gets pierced first. We see here that this trade gets pierced to the long. So let's take our long tool, and let's see where this trade would have activated, right at the top of this candle right here. Our stop loss would be set to 35 points, which again is right there with our source candle. Our take profit is 35 points. And guess what? We get another profitable trade. One trade, 35 points. So as you guys can see, The setup is simple. It's systematic. You've got time-based rules that help you not overtrade the system. The rules are pretty simple. I think that you guys will find this strategy. It's one other strategy that you can put into your arsenal. So I'm really hoping that you guys like the strategy. You like what I'm coming out with on my channel. Please comment below if you like the strategy. You guys can comment on ways that you could think that the strategy might be better. Subscribe to my channel, because that obviously helps, and it knows that I know that I'm putting content out there that people actually want to see. And I got two things. I got a natural gas trade strategy that is as simple as this. It's actually might even be more simple because it's just one trade. Again, super profitable, morning trade only. I'm going to put that on probably at the end of next week. And I've got a few small account challenges that I'm doing also next week on a futures account, which I will be featuring Robert Anderson's gold line trading bot that he put out. I've done a few videos on that, and I'm going to be starting a challenge on that. So please look out for the channel and enjoy. Take care, guys.